Before we dive in, hit subscribe so you don't miss new episodes. If you find value, a quick helps us reach more people. Let's get started. Picture this. That almost liquid gleam of meticulously polished chrome, catching the light, the deep comforting scent of well-maintained leather that only comes with age, and then that guttural growl of an engine, perfectly in tune. For so many, using a classic car is pure passion. But what if that beauty sitting in your garage, the one you lovingly care for, could actually be, well, a hidden vault? What if it held the key to significant funds without you ever having to part with it?
Yeah, it's fascinating, isn't it, how the world of high finance is increasingly recognizing classic cars, not just as collectibles, but really as a serious asset class that can be leveraged. It's a sophisticated corner of the financial landscape that even seasoned investors might overlook.
Right.
We're definitely not talking about your standard trip to the bank for an auto loan. This is a much more nuanced approach, specifically designed for the owners of exceptional vehicles.
Exactly, and that's precisely what we're diving deep into today. For you, the learner, someone who's keen to understand how these perhaps unexpected financial strategies can work for those holding significant assets. Our mission, as we explore the insights from the Classic Car Financing 2025 Guide to Unlocking Liquidity, is to reveal how high-value classic cars can be strategically employed to unlock substantial capital and, fundamentally, enhance your financial flexibility. Think of it accessing funds that can open up new possibilities, all while keeping the keys to your prized possession.
And if we step back for a moment, just look at the broader economic trends. The rise of classic cars as a legitimate alternative asset class over the past, say, 2 decades is quite remarkable. This isn't just some fleeting trend. It represents a tangible shift in how certain tangible assets are perceived and valued in the financial world.
Okay, so this isn't just about a few enthusiasts driving up prices at auction. This appreciation has reached a level where serious financial institutions are actually taking notice.
Precisely. The sustained and often significant appreciation we've seen in the values of certain classic models has definitely caught the attention of specialized finance providers.
Yeah.
And also the sophisticated wealth management divisions within private banks.
Ah, the private banking desks.
Exactly. In a financial environment where agility and access to capital are paramount, and where traditional credit avenues might have their limitations, the ability to strategically leverage these high-value assets offers a compelling advantage. It's really about transforming a prized possession into a potent financial tool.
So the core concept isn't about getting a loan to buy a classic car, although that happens too, but rather using a car you already cherish as collateral. How does this bespoke classic car financing actually operate? What makes it so different from the kind of auto loan you'd get from your local bank or credit union?
That's a really crucial point. And the key to understanding it lies in recognizing the fundamental distinctions. Classic car financing. At its heart, yes, it involves securing a loan. However, the unique element is that your classic or vintage automobile, or maybe even an entire collection, serves as the primary security for that loan.
Okay.
The critical difference is that this isn't the sort of one-size-fits-all approach of a typical auto loan. The entire process, from how the car's value is determined right through to the structure of the loan itself, is custom-built. It accommodates the specific characteristics of these unique assets and the often intricate financial landscapes of their owners.
Right, so it's a completely different engine under the hood, so to speak. What are the specific characteristics then that define this bespoke type of classic car financing?
Okay, first, it's fundamentally asset-backed. While, sure, a strong credit history is always beneficial, the lender's primary focus is really on the intrinsic value of the classic car itself. These specialized lenders possess a deep understanding of the collector car market. They employ experts who can accurately appraise these vehicles, going far, far beyond standard Blue Book type valuations.
Right, yeah, you can't just look it up online.
Not for these kinds of cars. Secondly, you'll often find more favorable loan-to-value or LTV ratios compared to what you might see with other luxury assets, like maybe art or jewelry. It's not uncommon to be able to borrow between 50% and maybe 70% of the car's appraised value.
Wow.
And in some cases, depending on factors like extreme rarity or impeccable provenance, maybe even higher percentages might be possible.
That's a significant difference in leverage. Now, about figuring out the actual worth of these classics, I can imagine that's not as simple as checking a price guide.
Exactly. The appraisal process is a highly specialized undertaking. These lenders collaborate with seasoned experts who possess an intimate knowledge of the market. They're tracking auction results, analyzing private sales data,
Hmm.
and understanding all the nuanced factors that contribute to a top-tier classic car's value. This level of expertise is just leagues beyond the algorithms used for typical vehicle valuations.
Makes sense.
And finally, the loan structures themselves are often highly bespoke. The loan term, the repayment schedule, which can even include interest-only periods, and sometimes even the currency of the loan can be tailored. It's all about aligning seamlessly with the borrower's overarching financial strategy.
Okay.
It's about crafting a financial instrument that works in harmony with their broader wealth management goals, really.
This paints a picture of a much more sophisticated financial tool than I initially conceived. So, for a collector intrigued by this possibility, where would they even begin to look for these specialized financing options? You mentioned they're not exactly advertised during the evening news.
That's right. These aren't mainstream financial products you'll find, down at your local bank branch. Typically, these options are offered by specialty finance companies that concentrate on lending against high-value assets. Think luxury assets.
Okay.
Private banks, especially those catering to ultra-high net worth individuals, often have dedicated teams or desks that can structure these unique deals. You might also encounter private lenders and family offices. They sometimes have a greater appetite for niche assets and can offer more flexible and, frankly, agile solutions.
Right, maybe quicker turnaround.
Potentially, yes.
Hmm.
Lastly, there are specialist brokers who operate as intermediaries, basically connecting collectors with the most suitable lenders within this specialized ecosystem.
Okay, so it's more about tapping into a specific network, maybe through wealth advisors or existing relationships. What about the actual process of securing one of these loans? Is it as straightforward as filling out a standard online application for a regular car loan? I suspect not.
Not in the slightest, no. The loan process is generally much more comprehensive. You'll be required to provide extensive documentation regarding the vehicle.
Like what?
Well, its complete history provenance is key records of any restoration work, details of your insurance coverage. A meticulous valuation of the car will be conducted, as we discussed. And the lender will also want to gain a thorough understanding of your overall financial standing and, importantly, the intended use of the borrowed funds. What's the purpose?
Right.
However, as the guide emphasizes, for the right client with a qualifying asset, this more rigorous process is precisely what unlocks significant financial power and flexibility. It's worth the effort.
It sounds like we're peering into a somewhat exclusive realm of finance. The guide suggests that this relative obscurity actually creates an advantage for those in the know. Why do you think high-value classic car financing has remained somewhat, well, under the radar?
Well, several key factors contribute to this. Firstly, as we've discussed, it demands a very specialized form of expertise. Traditional lenders often lack the deep market knowledge and appraisal capabilities needed.
They just don't have the in-house know-how.
Exactly. To accurately assess and manage the risks associated with classic cars, especially given their potential for value fluctuations and the subjective elements influencing their worth. It's tricky.
Sure.
Secondly, for the clientele who typically engage in this type of financing, often high net worth individuals, discretion and privacy are highly valued. These providers understand this implicitly and conduct transactions with a high degree of confidentiality.
That makes perfect sense. You wouldn't necessarily want the details of your financial maneuvering tied to your prized vintage Ferrari splashed across the news, would you? What are some other reasons for this opaqueness?
The inherently bespoke and often complex nature of the loan terms also plays a significant role. Each loan agreement is frequently custom-tailored, right? It takes into account the specific attributes of the vehicle, the individual needs of the borrower, and the lender's assessment of the associated risks. This lack of standardization naturally limits widespread understanding and accessibility.
So it's not easily packaged and sold.
Pretty much. And perhaps the most compelling reason for its relative obscurity is the primary benefit it offers.
Yeah.
The ability to access substantial liquidity without the necessity of selling the underlying asset. This avoids triggering capital gains taxes, avoids the emotional considerations of parting with a cherished possession. It positions it as a strategic financial maneuver rather than a public disposal of an asset.
So it's about strategically extracting value without relinquishing ownership. That's the core appeal. The guide offers some compelling examples of how these unlocked funds can be strategically deployed. Could you elaborate on some of these financial strategies in more detail?
Certainly. The freed-up capital can be strategically allocated in numerous ways. For example, it can provide the resources to capitalize on new investment opportunities, maybe in sectors like real estate or private equity.
Right.
It could inject essential working capital into a business venture or facilitate the diversification of an investment portfolio without needing to liquidate existing holdings. It can also be strategically employed in, say, estate planning, provide the means to acquire additional collector cars that happens too,
Of course.
or even serve as a short-term bridging loan to navigate temporary financial needs. The crucial point is that this capital doesn't remain idle. It transforms into a dynamic and potent financial resource.
These aren't just abstract possibilities, are they? The guide includes some real-world scenarios that vividly illustrate how this works in practice. Let's maybe dig into a couple of those to really bring this concept to life for you listening.
Absolutely. Let's take the example of the property developer who owned a meticulously maintained 1963 Aston Martin DB5. A beautiful car.
Iconic.
Totally. He identified a time-sensitive opportunity to acquire a prime piece of land, but found that traditional bank financing was just proceeding too slowly to meet the deadline. Sound familiar?
Oh, definitely.
So, by leveraging his classic Aston Martin as collateral, he was able to secure a substantial bridging loan. We're talking £2 million with remarkable speed. And importantly, on interest-only terms. That allowed him to seize the investment opportunity.
Wow.
It perfectly illustrates the agility and speed that classic car financing can provide when conventional routes are just too cumbersome.
That's a fantastic example of how a tangible asset, something sitting in a garage, can unlock a time-critical financial advantage.
What's another real-world scenario that stood out?
Another particularly compelling case involved a family office seeking to make a significant co-investment in a private equity fund.
Okay.
Rather than liquidating existing investments, which, again, could have triggered unwanted capital gains taxes and disrupted their long-term strategy, they utilized their impressive collection of post-war European sports cars, valued at over $15 million.
A whole collection as collateral. Exactly. They used it as collateral to establish a revolving line of credit. This allowed them to participate in the private equity fund while retaining their cherished automobiles and their existing investment portfolio intact. And the negotiated loan-to-value in such scenarios, reflecting the quality and the diversification of the collateral, can often be quite attractive.
These real-world examples truly highlight the strategic sophistication of this type of financing. It's clearly not just about a sudden need for cash, but often a very calculated approach to asset management. The guide also discusses the increasing momentum behind classic car financing. What are the key factors driving this growing popularity?
Well, there's several converging factors contributing to this upward trend. The sustained and, frankly, often impressive appreciation in classic car values over the long term has been a primary catalyst. It's solidified their status as a legitimate asset class that lenders are increasingly comfortable with.
They see the track record.
They do. The growing appetite among high net worth individuals for liquidity without the need to liquidate valuable assets, driven by considerations like tax efficiency and simply maintaining ownership, is another significant driver. People want options. Furthermore, we're seeing increasing innovation within the private lending sector. They're developing specialized financing solutions tailored to luxury assets, and there's a growing recognition of the inherent value and stability that well-maintained collectible vehicles can represent.
So the financial world is kind of evolving to better understand and accommodate the unique value proposition of these assets. What other factors are contributing to this increasing momentum?
Yeah, there's also the broader shift towards alternative credit strategies, particularly in the wake of economic fluctuations and sometimes tighter traditional lending practices. It's created opportunities for more flexible and specialized financing solutions beyond the conventional banking system.
Right, filling a gap.
Exactly. Additionally, the classic car market itself is maturing. There's increased transparency and professionalism driven by established auction houses and sophisticated valuation tools like those from Haggerty. That gives lenders greater confidence in assessing and managing risk.
This all sounds like an increasingly viable option for collectors who might want to explore it. However, the guide also emphasizes some crucial nuances that collectors need to be keenly aware of. What are some of the essential considerations for anyone contemplating classic car financing?
Okay, yes, there are several important aspects to consider. Collectors should anticipate that lenders will likely adopt a relatively conservative approach to valuation. Don't expect top auction estimates.
Manage expectations.
Right, and the interest rates offered will likely reflect the inherent market volatility and the bespoke nature of the loan agreement. It's not going to be prime rate. Also, not every classic car will qualify. Lenders typically prioritize rare, impeccably documented vehicles in exceptional condition with a strong and verifiable provenance. Think Concours-level Ferrari, not necessarily a project car. They will also have stringent requirements regarding secure, often climate-controlled, storage and comprehensive insurance coverage. And in certain high-value transactions, they might even require the vehicle to be held in their custody for the duration of the loan.
Oh, interesting. Physical custody. Those are critical practical considerations that potential borrowers need to factor in. What else should they keep in mind?
A thorough understanding of the loan structure is absolutely essential. We mentioned the typical loan-to-value ratios, generally falling within the 50% to 70% range. Pay close attention to all aspects of the loan agreement: interest rates, any associated fees, the flexibility of the repayment terms, ensure they align with your overall financial strategy and objectives. Does it actually work for you? It's also paramount to engage with lenders who possess specific expertise in both finance and collectible automobiles. A general lender will likely lack the necessary nuanced understanding of this unique market.
Fight a specialist.
Definitely. Be prepared for a comprehensive credit review. Even though the loan is secured by the asset, they still want to know you can handle the payments. And always, always meticulously review the fine print of the agreement.
Yes, the fine print.
Pay particular attention to clauses concerning default conditions, potential value fluctuations, what happens if the market dips, and any prepayment penalties. Ensure your insurance policy provides agreed value coverage that meets the lender's specific requirements. And finally, be aware that refinancing options may become available as your vehicle appreciates in value or your financial needs evolve.
So it's definitely a more involved process than securing a loan for an everyday vehicle. It requires a solid grasp of the market dynamics and a very careful evaluation of the loan terms. To bring our deep dive to a close, what's the key takeaway message for classic car collectors considering this option?
I think the fundamental message is that for serious collectors, their classic automobiles represent more than just objects of personal passion. They are appreciating assets with the real potential to be strategically leveraged for financial purposes. Classic car financing offers a sophisticated mechanism to unlock significant capital without the necessity of selling these cherished items, disrupting their carefully curated collections, or immediately incurring tax obligations.
And it's crucial to reiterate, as you said earlier, this is a far cry from the typical financing you might encounter at a car dealership down the road.
Oh, absolutely. Worlds apart. These are highly tailored credit facilities designed to integrate discreetly within the framework of a broader wealth management strategy. Your classic car can effectively become a source of readily available liquidity to pursue investment opportunities or address other financial needs, all without requiring you to part ways with it.
So the key insight is that with the increasing sophistication of specialized lenders and the evolving dynamics of the classic car market, strategically monetizing your collection while retaining ownership is becoming an increasingly practical and strategic option for the right person and the right car.
Exactly. It's a growing and maturing field.
Thanks for listening. If today helped or made you think, hit like it tells the platform this content matters, and tap subscribe if you haven't already. See you next time.
And finally, maybe consider this. How might the assets you currently own, beyond traditional investments, hold untapped financial potential? It might prompt some further exploration of alternative financing strategies out there.